Hey everyone, just getting the link shared out here, and I'll be back in a couple minutes to start. Just giving people time to get in before we get started. Starting now, BTC hashtag Bitcoin. All right, I'll be back in a few minutes, and we'll get after it. Hello everyone. All right, we're gonna get into the Bitcoin charts here. I did say a few days ago that I was going to do a live stream and explain how I botched this trade. I entered here, why I ended up taking profits early, and I actually also hedged my position short and took a stop loss on a short in this price action, which looks absurd when this was my trading plan, and certainly a rare moment where I just felt completely kind of at a loss for the data I was seeing. And I want to explain some of that because, and go through it, I didn't feel very good about how I navigated that price action because I was super patient for this entry all day. And I think a good learning moment, because we're going to be talking about some of these same concepts during this live stream. So we're going to start with this little story. I'm gonna tell you where I think I certainly went wrong. Although obviously I took partial profits on the trade, so I mean it's not the worst case scenario. You get along with some profits. You overall the experience is a profitable one, but completely misplaying this price action with that position. So what we're going to do is we're going to take a look at order flow, my updates at the time, and certainly some internal turmoil, how I was managing that trade. And then we're going to get into the charts now, the position I'm in. I am long from here. I'm going to explain why. I'm going to explain why I'm targeting up towards these highs and these highs, but ultimately looking to short this back down. And I'm just giving my interpretation of the data as I see it. And I don't know what's going to happen, but I think it's a reasonable idea. And I'm going to look for clean triggers, and if the price is just breaking out, I'm not going to take a short, but I'll explain some of this. So we're going to start with just going over that first trade really quick. We won't dwell on it for too long. This was 3 days ago. I took the trade. This was the trade I was waiting for. I'd explained this idea throughout the day. So essentially I did a bunch of analysis that morning. what I was looking for price to come down into this higher low and waiting for that clean entry with local invalidation, trading it up into these highs. And so waiting, just saying, hey, this is what I'm looking for. I'm looking for it for order flow reasons and technical reasons. Saying here, hey, I'm preparing to take this trade. Price is coming down to my entry. Again, preparing. Just this is how I do the updates. These are the ideas. This is how I'm executing them. Just demonstrating the patience, the discipline, the plan, invalidation, all that stuff. A bit of a region here, looking for this liquidity to get swept, willing to enter on the reaction. So I take the trade. And what does price do? It goes straight up, which is great. That's what you want to see. Said still no certainties. Need to break a bit of structure and start ripping. But I'm just going to sit in this one for the 69K target and see what happens. Probably could pull a bit of risk out. And what I mean is I could bring my stop up a bit off this clean reaction. Said the hard thing about entering on these liquidity wicks is pressing the button. The nice thing is that the trade can be easier to sit in with strong clean reactions, moving away from your entry quickly. Now understand that at this point I'd spent many hours forming my thesis for this trade and waiting for it all day, preparing just a nice clean entry. And so feeling pretty good. And I said, just going to say this should be a more impulsive move. So liking what I see already. Price is coming in, just impulsing right off the entry there. And my plan was actually to walk away for the night. I was like, okay, I've done my job. The trade either works or it doesn't. I'm out of here. And then I start looking at order flow. And so I'm going to go into some of this today because it's relevant today. And it's relevant for my trade thesis now. And what do I see? Well, I just see 11.6 million longs, 21.1, 21.2, 9 million market longs straight into this local level. Essentially, this has always ended in price going lower. And this is the most aggressive longing we had seen get absorbed on the BlackRock ETF. So I'm watching it and I say, hey, I'm just going to keep an eye on this because I'll consider begrudgingly taking profit, TP1, cutting down that position. I don't know what this is. Cutting down that position and begrudgingly taking a TP because I don't really know how else to interpret this but bearish, but I'll be patient. And then even more longs come in and get absorbed. So I said, no other way to put it, then this is the most bearish thing I've seen, which is somebody's willing to take the other side of these longs. So I'm trying to interpret this data. And so essentially more and more longs come in, get absorbed, and I say, sort of rain on the parade. I'm going to take profits off this long, and I'm going to take a head short. So anyways, I go into this, while I take the short, I basically just say, hey, I'm a little frustrated by this, which is spent all day waiting for this. I'm seeing exactly what I want to see. I can't explain the data that I'm seeing other than lower is more likely. So I'm going to make the decision just to take profits and take a head short. I can't see any reason not to. But this is before the short had even worked or not. I just was feeling really conflicted because I felt really good about that trading plan. But anyways, I said about to take the L. I'll probably be looking to add to longs tomorrow. I think I figured out what's going on here. So I said, sorry guys, not feeling the best about how I navigated that one. Put a loft onto the PA today and felt pretty dialed in. Then saw something I really didn't expect to see and couldn't explain away as irrelevant. And I'm going to go to the order flow and we're going to take a look at that right now. Realized this a little bit too late. So anyways, everybody was quite kind about me botching that one quite badly. And, you know, someone even said, like, this was a nice thing to read here. Maybe I'll pull it up really quick. I understand the drive for perfection, the frustration when things don't play out. Don't beat yourself up with it. You've made me more money in the first week of membership than I have with other groups in 6 months. I actually have confidence in your analysis. So, some people made a joke. The one time you get to like bash me for making a pretty dumb error there, everyone's just too nice, which I appreciate. But anyways, so we're going to go into, that's how I messed up this trade. But let's take a look at the order flow and what the thought process is and how that's kind of playing into my perspective here. So let's go to this. All right. We're looking at two types of order flow here. One is on Bybit and one is the BlackRock ETF. So this is what I was seeing in the BlackRock ETF, which is essentially, there's two types of, and it's playing into my thesis for my short into the weekend and why I'm long now. It's either going to work or it's not. We're going to find out. But the basic premise here is every time there's been very aggressive longs coming in, that's at market. So you can imagine there's market longs, market shorts, market selling, and limit buying, limit selling. Limit sellers get punished, market sellers get punished, market longers get punished over and over. It's one of the reasons I took the short at 73K, which is here we're ranging, all these aggressive longs come in. You could kind of imagine if things play out the way they have been, these traders are going to get wrecked. And that even happened on the way down. This data has been so reliable. It's almost just like clean cut, not specifically where it's going to bounce from, but what direction price is more likely to go. So why not be willing to navigate the charts with this data? And then I see the most extreme example of longs coming in. And here, again, this is just absurdly aggressive longing into these local highs before our local retracement. And so all of this indicates that price is more likely, if this data is going to remain congruent, it's not certain, but more likely to trade lower to wipe out these traders. But there's something a little bit more dynamic about this. And this is new data, right? This is the BlackRock ETF, which is, it only trades during market hours, so it doesn't trade on the weekend. So then I started thinking today, on the weekend, well, something like the Bybit data here is actually quite bullish. So the order flow is bullish on Bybit. What would wreck Bybit traders? For price to push up through these highs and punish all this aggressive selling, it's the opposite of the data of IBIT. Bybit's data is opposite. So what about the dynamic of pushing up and taking this liquidity over the weekend when all these aggressive longs are still trapped in IBIT till Monday, grabbing this liquidity and then retracing and putting them back underwater into the week ahead? And if this was before I started looking at the IBIT data, when I relied more on the this data solely, the Bybit data, these are just easy longs. I mean, bullish absorption, bullish absorption, bullish absorption. And then I usually don't trade the weekends, but now I have this interesting idea where it being the weekend is actually a part of the trade thesis. So let me go into this trade setup I'm in now, and then we're gonna look at the charts. My thoughts on them. All right, so this is the setup I am in now. I explained this thesis to the members today, which was understanding the dynamic between the order flow that I kind of just explained to you. I explained it at a different time a little earlier. I said, in fact, I'm interested in trying along here because Bybit data is quite bullish and this whole dynamic makes sense. I've entered long with disinvalidation under the local lows. And there's an order flow reason about why I'm trading this so tightly. It doesn't mean the position has to hold, but what I note here is it's just the same order flow concepts on a low time frame. Is I can identify these bigger traders absorbing aggressive selling here. So I can justify taking a tight stop loss. I made a quick 5-minute video explaining the idea of the tight stop loss. We're not going to go into it, but basically, why is my invalidation here and not traded wider under here. It's not to say I won't get stopped out, but just explaining it. And I think this is going to be valuable for a lot of you guys. So I'm just going to break down the concept. As price is coming down into, so I enter here and my invalidate, this is about 0.5% lower than my invalidation. The thesis of invalidation is identifying and using these buyers as a reasonable protection for the position. This buyer. So I don't care if price is coming back to this level. That doesn't invalidate my trade. I said I thought I would use this as an opportunity to point out that although price is going lower, and I very well may take a stop, my trade can't be invalidated by the fact that prices come into these local lows, as the entire logic of placing my invalidation under them was to have identified some local limit buyers here and relying on them as a reasonable idea for protecting my position. That doesn't mean that the position won't get stopped out, but coming and testing this level can't be invalidation when the idea is that there's some evidence of bigger traders sitting here stepping in to hold up price. For me, the idea of the trade is not that price will go up immediately from my entry. The idea is that we are consolidating with bullish absorption, and I'm taking a position within that structure and invalidation, which I'm fine if it's hit, is evidence that those traders aren't sitting there willing to absorb. And invalidation is evidence that those traders aren't sitting there willing to absorb selling, which is not currently the case. Currently, there's more evidence they're willing to do that, because as price comes down and tests the level again, this is the level where I'm identifying the limit buyers. We have more aggressive selling getting absorbed. So why would I invalidate my trade at the level that I'm looking to protect my trade? Gave a couple updates here. The thesis of a trade, especially if it's not based on a liquidity grab type move, can't always reasonably use the idea of if price is going higher or lower, it's invalidated or validated. Building the thesis to encompass the fact that price can go higher or lower locally, and it's irrelevant to the trade. Idea being invalidated is important. So anyways, that's the basic premise of the trade here, and obviously we're breaking up and getting a bit of a move. Someone's saying, yo, Luck, I'm at the gym right now, seeing that my trade is a nice profits because of your insane analysis today. So I spent a lot of time working through this just because, hey, I want to get on the right side of price action here, building that thesis. And even though I didn't long the bottom of this move, which of course, you always want to long the bottom, short the top, I can still get into a very reasonable, tight invalidation, high risk reward setup, identifying these buyers and having all this other context, and then getting into this trade. And so, not to say that there weren't other entries either. As we come down into the level, I said, ideally want to see this level hold with more evidence of aggressive sellers getting absorbed, bullish absorption. So we come into that level, said so far so good. We have another big sell-off get absorbed. Those buyers are stepping up and holding up price. And so that's a nice technical retest on the breakout. And it has the order flow confluence that you want to see for continuation after the initial move, which is this. Let me pull it up, which is, again, I know not everyone's going to understand these order flow concepts, but essentially aggressive sellers, limit buyers, bigger traders sitting up here holding up price pushes up, comes for the retest. We see more aggressive selling into this retest. CVD makes another lower low, or plus making a higher low. More evidence that these traders are coming in, stepping in, and pushing up price. So that's what I want to see for that long setup. All right. So my primary thesis here would be something like this from an order flow perspective, but how it would play out on the charts is, let's come take this liquidity. This is just the logic. This trade might not work, who knows, but let's come and take this liquidity while the IBIT ETF is closed on the weekend, where all these positions that are still in their longs, still trapped, they haven't closed them, can't even take advantage of Bitcoin pushing up here. And there's two levels. There's these highs and there's these highs. I'm interested in shorting. Um, and so like a short trigger, for example, would come sweep this high into the 786. Might look like something with a stop above this wick, looking for that clean reaction, and then shorting into the lows. And where's my target? Well, there's a couple ideas for a target, and I'm going to be paying a lot of attention if we even do break down from here. Paying close attention to the order flow in the week ahead, which is the target that seems most reasonable is just to come and take this wick. That's a really nice, clean idea. You could even look for signs of strength reclaiming this level or holding the wick or some consolidation here with bullish order flow. But I'd be less interested in taking longs there and closing my short until those IBIT traders are forced to close at a loss. And as soon as I see that 100 million volume in longs that have been opening here, closed at a loss, stopped out, and those getting absorbed, then I'm going to start looking for the bottom to come in and another move to the upside. So this makes a lot of sense to me. The idea would be this: if I was to break down the logic as simply as I could, and the difference between the IBIT data and the BIBIT data, a move to the highs wrecks and punishes the BIBIT traders. A move to the lows wrecks and punishes the IBIT traders. So which way is price going to go? Usually there's a little bit more congruence between the two, or confluence between the two. They're kind of doing the same thing. They're doing the opposite things. Well, what would wreck both of them? A move through the highs on the weekend, only to have price reject into the week ahead, and that actually wrecks BIBIT traders and IBIT traders, allows price to both go up and down and not reward either of those aggressive traders. So I really like that idea. You know, I analyze the markets every day. There's always new data. For example, I was not taking longs here on Friday because I'm thinking, hey, there's all that IBIT liquidity sitting there. Why not just run down into these lows and wipe it out? And then my thesis then was, and after they've closed into the close on Friday, maybe gap up higher and long into the weekend. But of course, that's not what happened, and the IBIT market is now closed, and I have all this new data. So hey, this makes sense to just take a long based off this thesis. I am curious. There is undoubtedly going to be a lot of okay, yeah. I was going to say there's undoubtedly going to be people watching this not understanding really what I'm talking about, and I wanted to get some questions, but I just got a question that I think is that. So the question is, why is wrecking people the driving principle of the analysis? All right, so I'm going to explain that. And we're going to look at some order flow. Don't think of it as necessarily simply wrecking people. Let's think of it as liquidity. Okay, so we're going to look here. Give me one moment. Oh, let me switch the screens. All right, this is just a clean, good example. It demonstrates the principles. All right, we're gonna look at BIBIT order flow here. All right. So for every person who buys a contract, there has to be a person who sells it. For everyone who sells the contract, there has to be someone who buys it. We're gonna look at an example here before we tested all-time highs for the first time on Bitcoin, as we're ranging sideways for 3 days. This is into Friday, Saturday, Sunday, rallying into all-time highs. Well, there's two types of traders demonstrated by this order flow, and I'm going to explain them here because this is just such an egregious example of bullish order flow, and why this price action wrecked certain traders and rewarded other types of traders. So what happens here as we range and price actually starts holding up higher lows is we can see CVD is going lower and lower and lower and lower as price just goes sideways and is actually trading higher than these lows, but CVD is making lower lows. Well, what's that data actually suggesting or telling us explicitly? That there was a negative cumulative volume delta here of $208 million. And so there's two types of traders here. There's the aggressive trader, which is entering at market, so market shorting, stop losses, executing their orders at market. And there's the limit buyer. And the limit buyer is sitting here with a limit buying position, absorbing a delta in volume in market longs and market shorts of $208 million. This is just on Bybit. So what type of trader does that? A big trader, right? If you're opening a $208 million position, you can't market long into that because you'd just wipe out, price would just go straight up and run through the books. So you have to build that position over time. Now, this trader, it's not that they want to necessarily wreck all the people shorting into this, but they want that liquidity. And what happens if you're in shorts here, and then things just get really bullish right here, right? So at the last little leg of it, heavy selling into this, and then we just start impulsing. This trader who's building the long position wants to squeeze these shorts out, and when these shorts start covering and FOMO longs start opening, that's what they use to sell their position into. And so in a sense, they're wrecking those traders. They need to wreck them because they need to unload hundreds of millions of dollars of a long position higher. That means that this quote unquote smart trader here who's been building a $200 million position needs to wreck some people if he's going to unload that at the highs. And he wants to unload it at the highs because he doesn't want to unload it and then price go higher. And he kind of creates the high in this case. So there's this, and so we can just look at a couple examples. I've just gone over this, so it's kind of fresh in my head. But that one of the reasons I was longing into all of this, right? But we've seen it many times on different time frames. Same things happening here. We have this initial rally and super aggressive selling into this range. CVD is making a much lower low. Price is making a higher low. Again, just a big trader sitting up here. People shorting, people unloading their long positions. Again, more bullish absorption into another impulse into the highs, wrecking people, right? What wrecks you? Think about, I'm using the term wrecks, but there's a couple ways to get wrecked. Let's just say you sold off all your Bitcoin down here, and not only did you sell it, you just start shorting. You're shorting everything here, and price just keeps going higher and higher and higher. Well, that wrecks you. One, you're offside, you're no longer long. Two, you're short, and you're getting squeezed out and having to cover at a loss. But you're also liquidity. You're two types of liquidity. One is if you're short, you're at risk on the market, and the higher price goes, the more and more pressure it's putting on your position, and that liquidity can be used by because you could just say, who would buy up here? Well, people who are short, they would buy up there because they have to cover their short positions, and they'll buy these positions from these traders trying to quote unquote wreck the aggressive short sellers here, or the aggressive shorters. The other type of person who would buy up here is somebody who thought this was all very bearish, they didn't get long, and then they just see price going higher and higher and higher, and they FOMO into a breakout. And they're buying. They're also willing to buy from these traders. And so you could look at it as certain types of traders getting wrecked and certain types of traders being rewarded. And so the idea is here, the big traders who are absorbing all this selling are getting rewarded. The reactive traders, the aggressive traders that are just entering market orders, one shorting breakdown, shorting the lows, making, let's just call it an emotional, impulsive decision, aggressively selling into this. We had tons of shorts opening down here as well. We can see here, increase in open interest, 19.2 million negative delta in this 5-minute candle. Those are the types of traders that get wrecked. So like the very sophisticated traders aren't sitting here like, oh shit, price is going down, I better get into a $20 million short. They're saying, I'm going to build my shorts at the highs in a range, absorb this buying pressure, and then unload them at the lows, and vice versa, right? So So some traders are going to get rewarded, some traders are going to get wrecked. The type of traders that typically get wrecked, and you can spot them in order flow to some large extent, is the ones who have just sold everything here. They're going to short this whole move up, and as soon as price breaks these highs, they're going to start longing like crazy into a big, I'm not saying this will happen, there should be evidence if it is, into these traders' shorts, and then re-rotate to the downside, and those traders get wrecked, and the traders who are shorting the highs and longing the lows are getting rewarded for not being super reactive to price. And I can already just tell you what do you think is happening here in order flow so far? Selling, 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 aggressive selling, just being held up by bigger traders, just limit buying everything here. And there's not really any aggressive buying yet. There's actually just aggressive selling into this rally, as would indicate that people are actually bearish here. They don't trust or believe in this move, and so they're just selling into it as price just impulses, grinds higher. And what we would hope to see for the evidence of more downside, and it's not because I want traders to get wrecked, it's just because it would support my thesis, is what would be more bearish is if we take these highs and then a ton of aggressive longs start coming in up here. And unfortunately, if you see that and price starts rejecting, and then price starts forming bearish order flow divergences, it's a sign that those aggressive reactive traders are going to get wrecked up here, and there's somebody looking to push price down. Now, of course, that's not always the case. They don't, the limit buyers, limit sellers don't always win, but it's basically like placing, would you rather place your bet on the trader that just absorbed $200 million in selling in a range holding price up, or the random FOMO shorters here that are just marketing into positions over the 3 days? Who has more control over the direction of price? So, all right. And so anyways, the whole thesis is here. This is bullish on Bybit, but there is clear big traders selling into this IBIT order flow. So what price action wrecks both? I know this is complicated. I know this is a little bit more advanced, I guess, in the analysis. And it is for me. I've had to do some really kind of critical thinking about what makes sense here, because I think price should be trading lower on Monday would make the most sense, but that really has nothing to do with what happens on the weekend, because IBIT doesn't even trade on the weekend. So why not just have price trade higher through the weekend and come back lower towards Monday? All right. Let me read a couple more comments. Someone said I use SMAs and EMAs, and I think price could top out at 68K, though. Does that coincide with your analysis too? It's an important region, basically. I mean, it doesn't take a mastermind to understand that there's liquidity above these highs. This is more around 69K. We have an important fib there, which is our golden pocket, 618 from the high to the low. And it's just, where are there going to be a lot of stops for shorts, where there are going to be a lot of people wanting to break out long. This region, very reactive region. There's a part of me that just says, hey, looking at order flow, the higher the better, and really wanting to see some of that IBIT bullish absorption play out, some really aggressive breakout longing, shorts getting wrecked. 786 I think looks quite nice with this pivot high. Anything above that, and you got to start considering all-time highs. So 68K, I'm not saying it's not reasonable. There's clearly some resistance here. It's a high, but I would probably prefer to see these highs run, personally. Whether or not they are, who knows? There's highs all along the way. I'd like to keep an eye on the liquidity up here, but right now probably targeting towards minimum of these highs for a TP I mean, I might make a decision to take some profits, but right now I see no reason to. Price, the thesis of my long is playing out. Price broke out, retest, everything's bullish, bullish, bullish. Price is going straight up. So let's just target towards these highs. And I wouldn't mind seeing a break right through here. And if I see this, I'll just short it with risk management. Same thing here. If this long didn't work, that's fine too. I'm trying to put on a reasonable thesis with risk management. But looking for a sweep or rejection here, could even trade this tighter. Like the tightest I might consider trading it is just a super clean reaction, high volume, high delta. Try a stop right above the high and get something like a 14, 15R setup. But got to see what price is doing up here. But I'd say the most important thing is I'm just giving my perspective on the charts. I don't know what's going to happen. I think you should follow your own analysis and your own view on the charts. Let me just pull something up here. One of the important things I try to do with everything I share is I got a really nice message from somebody the other day. So basically, they'd been a member here for 2 years in the LATF. I've never heard from them once. I've never even seen their handle. They've never typed in chat. They've never sent me a message. And basically, they were messaging me to say that they're leaving the LATF. So they said, thank you for showing the reality of probabilistic thinking overlaid on risk management, on a risk managed strategy, showing the setups, the thought process, the grit to persevere, to show up over and over with consistency. Without what you're doing here, I really can't imagine how long the journey would take to realize what trading actually means. I genuinely couldn't be more thankful that that you share your knowledge and offer guidance on this very difficult path. And then they said, they wrote a little bit more, but keeping that in mind, I've decided to leave the group for a time as I find myself rarely looking at other setups and want to see if I can carry this momentum forward with the setups I've established. I fully expect to be back at some point. I just didn't want to leave without letting you know that what you're doing makes a difference. It means a lot, and I know that many, including myself, could not be more thankful for this opportunity. Thank you so much. That's such a nice message to receive. For many reasons, and you're thinking about one thing I really like to do is share my ideas and my thesis, but without stepping on other people's ideas too much, right? And without giving signals. So the gist of what I'm saying here is, of course, I would love to have some of these more experienced traders who are having breakthroughs to stick around and share some of their insights, but that's not the point of the LATF, which is the Discord here. The point is, and needs to be, that people can become independent, self-sufficient traders. And that's the only way you're ever going to succeed. And so the reason I go through so much effort to explain the logic of what I'm doing and why I'm doing it is not to give people a trade setup, but to give people principles that they could apply to their trading. And they might have a totally different style of analysis or style of trading. And so what I said here is each one of you has your own path as a trader. My goal is to contribute some foundational principles that you can take with you without getting in the way of your development. It's one of the reasons I explained the thought process instead of giving signals. It's simply a handicap without the analysis. It's a handicap without the principles. And what I mean by that is it's a handicap for me to say I'm long, stop here, and not explain why, not give any of the reasoning, the logic, the invalidation, the risk management, the kind of even some of the psychological, emotional principles that go along with it. And so, one thing that I want to say is all I'm ever doing is explaining what I'm doing and why. And some of those concepts might make sense to people, and some of those concepts may not make sense to people. But I'm just trying to instill certain, I think, principles and ideas that have worked for me, but there's not one way to trade. And so, as far as EMAs, because I saw one of the comments was I use SMAs and EMAs. I think price could, and someone said SMAs and EMAs are crap. Learn ICT. All right, so we have a conflict here. So somebody could say everything I'm saying is crap. EMAs are crap. You need to learn ICT. That's where it's at. ICT is crap. I see all this. There's more than one way to trade, clearly, right? There's ways to be a breakout trader. There's ways to be a trader that trades support, trends, ranges, and all of the above. And so I'm just telling you what I'm interested in. If you have data and you have trade setups based around those concepts that work for you, and that's how you structure your trades, then I think you should always follow your own analysis or your own plans. If for you that's ICT, I don't use ICT. I'm not going to say there's one way to trade, one type of analysis to look at. I can only explain how I navigate the market. So, are you in the Discord, Joe Mick? You said, do you trade stocks? Would really appreciate your views on Tesla. I have shared some views on Tesla. I kind of probably am not going to get into that here. If you're in the Discord, even as a public member, because there's the public side and there's the paid subscribed members, just shoot me a message in there and I'll share you some of my thoughts on Tesla a little later today. And then, yeah, so then another thing I would just say is, like, just because I didn't long the bottom here, which there actually was a really clean setup here, just sweeping this low into the 786, like this could have been kind of a nice little local try. The risk reward's quite good. I still found a very nice high risk reward setup based on this structure. And you know what? One of the things that one of the reasons that I went into this example, let me go to it here. One of the reasons I gave this example here, which was I already know that there's so many, I see it all the time, is like you're long here. This is the 5-minute chart. And price just comes down and retests these lows and people get pushed out of their long positions. And they're like, oh, I was long and then I got stopped down. The move came right after. You can't, and there's going to be a lot of people who get really bearish on this 5-minute candle coming and retesting the lows. You can't invalidate the long there. It makes zero sense. Based on the thesis, why invalidate your long at the range lows support, right? So I was trying to work through that as price was coming down and understanding why that's not bearish. And then I gave an example in the chat too of, just way too many people showing them getting stopped out right here before the move because they've actually structured this trade. And it seems pretty clear, like if you look at the chart here, that your stop might want to be under these lows if you're longing here, but they structure the trade more like this with a really tight stop that doesn't really make any sense. I'm not saying it's not a bash, but anyways, not long after somebody was like, hey, I just got stopped out of this trade. How could I have avoided that? And so I was trying to get, I don't think they'd seen the updates at the time, but there's lots of complexities obviously to trading, so certain styles, right? So this, like for me, longing this, I just have to have my stop under here. There's an order flow confluence, there's a structure confluence. Some people might be trying to trade like a tight aggressive breakout like here, and then maybe they catch it on the third try and that works for them. But so the point is, it's not just the analysis, it's also how you structure your trades around the analysis. Somebody asking for me to explain open interest because there's a misunderstanding online, which who knows, maybe you have a misunderstanding and I don't know what your understanding is, or maybe I do. But let's see. All right, we'll touch on open interest really quick. So this is, we have CVD, we have price, and here we have open interest. Blue is going up, red is going down. Open interest increases when there's essentially when there's positions opening in the market. And I might fumble around with the analogy here or the example because it gets kind of confusing in a way, but I think this is a good way to think of it. Let's pretend there's only two people in the market. So open interest is going up here. There's only me, there's you. I want to buy Bitcoin, and you want to short Bitcoin. Okay, so you want to buy one, I want to short one. We need somebody to exchange that contract with. So I say, I'll short one contract at this price, and they'll say, okay, I'll buy one contract at this price. We've just both put risk on in the market. I'm risk on short, they're risk on long. That's an increase in open interest. Okay, so now let's say that he says, I want to sell one contract, I want to buy one more contract. And I say, I want to short one more contract. That's an increase in open interest. Two contracts opening, two positions opening. But now let's say he wants to buy two more contracts. So he's already too long, I'm too short. And instead of me wanting to add to my short, I say, I want to sell him my existing contracts. That's neutral, right? So does that make sense? It's positions opening and closing. They can be longs and shorts. If open interest is increasing here on an increase in positive delta, we know that there is risk coming into the market. That can be both longs and shorts opening. Primarily, it's primarily risk coming into the market. If price drops down, so it's risk on. Risk on needs to be considered because when people are taking on risk, they can get liquidated, stopped out, and it's an important idea to think about. But sometimes price will drop on a decrease in open interest. So think of that like this. There's shorts opened at the highs, and there's longs opened at the highs. As price plummets, and you see a big decrease in open interest. Let's just take this for an example. Well, this is actually primarily shorts closing and longs closing. Price can go down, shorts can close, and these are shorts taking profits on this move down, and longs are closing because they're getting stopped out. So it's actually a decrease in open interest as there's less risk in the market because positions are actually primarily closing. Positions primarily closing, decrease open interest. Positions primarily opening, increase in open interest. Hopefully that makes sense. But okay, so let's go to the next question here. And this is I wanted to take a little bit of time on the weekend to I said I would go through how I screwed up that trade a few days ago. So I wanted to do that and what the logic of it was at the time. Just realizing too late that I wasn't playing 5D chess enough. And I just wanted to cover some of my thoughts here. Some stuff about Tesla. Someone said, if you understood ICT and SMT divergence is between ETH and Bitcoin, you would understand why you should have longed yesterday. I took the long at 64K because open interest has been rising with price. It depends where you look, I suppose. I'm assuming you mean here. Open interest was also rising with price here, though. And we went down, so there's always two sides to every story. Anyways, I'm not going to get into all that. What levels are worth watching under 59K? I mean, there's a lot of levels worth watching. Anything under 59K is just going to be probably a chaotic liquidity grab. Price could run wicks. I mean, there's obviously a major horizontal at 50K, but I mean, here's my basic view. It's like this. We could get something like this where price goes straight up and straight down 15%. this is an important region of support. Let's go to the 1 hour chart here. If we break down 59K, where's our structure? Well, this is a region. This is our structure. Anything in this region is important. If we break that down, where's our structure? It's 50K. I mean, I don't think that's likely to happen, but let's put it this way. If price breaks this level down and there's no long trigger and we're coming to here, I'll be interested in longs from this level. And I probably lean towards a more volatile run through this liquidity as being reasonable, like 50-50 if this would happen or this would happen, would be ready for both. But if we just break through this, what are we bouncing from here? I'll just wait for structure and I'll wait for 50K. If we bounce from some random place at 53K, well, I'll look to get long on some new structure and signs of strength. So levels I'd like to long around 56 to 55K. This is kind of an important region to watch for clean reactions if we break down 59K. Below that, it's 50K for me. But again, I don't think that's the most likely outcome. It's just something to be thoughtful about or wary of, I suppose, when if price does go down there. But it's not that just because I'd be interested in longs here doesn't mean it's the only long I'd be interested in. Oh, I want to share this count as well. So I shared this in the Discord, which is, you guys should follow him on Twitter. He said, looking at one of X-Force Global's counts and how clean it is in terms of current order flow between Bybit and IBIT, especially considering the weekend. I like the idea a lot, and you can follow him here. So I gave his handle. I think he's a great resource for Elliott Wave. People have asked me who I think is a great resource or what resources. So great resource to understand and learn Elliott Wave concepts. But so was sharing his count here because what he basically has, and again, you know, I just have a lot of admiration, respect for his Elliott Wave analysis, is price coming in, testing the 786. I think this was maybe his primary count even, coming up, taking these highs up towards the 786. This is a bit of a region, and then rotating back down into a Y. Now, does he think that the time frame that I'm looking at is the most likely and whatever? He has also alternate counts. You can go look at them. I just like this idea. Look something like this on the chart. And then considering all the things I've been thinking about today, it looks quite nice. So, yeah, I wanted to share that because I think it's a very nice count, and it was different than anything that I had come up with, but seems to be quite nice. And I mean, the idea coming in, bouncing off the 786 here, it doesn't get much cleaner than that, as that is essentially the low of the move, right? So very, very nice, very clean. I know my chart's a little messy here. Someone's asking, I know you've mentioned that you like using Bybit chart for BTC and open interest. Is there any issue with me using the Binance futures? I'll just say a couple things. I mean, I found the data unreliable. I find it has been oftentimes, I think, questionable how reflective it is of what actually is happening in order flow. And, you know, it's just, essentially there's things I've seen it do that shouldn't even be possible. And I've had some confirmation over the years that is probably may be the case. So I just stay away from the data. But I haven't looked at it in a long time, and it's very possible that it's quite actionable and clean. You know, one of the thing about all these exchanges that aren't heavily regulated, and I'm not making any accusations against specific exchanges, it's just the nature of the industry, that because they're not very heavily regulated, like something like order flow data, let's say, is kind of hit or miss in terms of how clean the data might be depending on the exchange, because they're not regulated. It's sort of like spoofing, right? Spoofing's illegal, and you could go to prison for spoofing in traditional markets. But spoofing is so rampant in crypto that like it's not even of course they're spoofing. Um, and so I find that the Bybit BTC USD perp data seems to be quite reliable and seems to actually reflect what is happening in price. And the idea of why I'm so interested in the BlackRock ETF data is because, well, there's a lot of volume, it's heavily regulated, and so in theory the data should just be clean. And it's kind of hard to manipulate some of this order flow data because it's not like you're seeing limit orders sitting in the books or spoofing that's pulled and the orders never get filled. It only is showing you positions that have actually been taken, the risk that is actually in the market. And so that's interesting data to me, and I like to see where those positions are being taken and where the risk is. So anyways, that's my thoughts. So all that said, I could be wrong about Binance's data, and I haven't looked at it in a while. Good to know. I mean, I'm not going to make a joke about this. Someone says there's an eclipse in 2 days, and BTC for some reason likes to move around those astrological events. That's undeniable. I mean, you pull up a moon chart. Do I trade around it as my primary trading? No, but I mean, I've certainly looked into it, and it's quite bizarre how reliable trading around lunar events, let's say, can be. Give me 1 second. I gotta take a leak, and then I might wrap this up. Might chat a little bit more here, and maybe sign off with a look at local order flow. All right, I'm back. Um, well, yeah. So one of the questions is, in my opinion, has price action changed since after the ETF's gone live? Well, in the sense that, I mean, look at this, like big uptrend here, right? Very choppy. Like we can just see a little bit of even this around all-time highs, this volatility. A little different than some of this, but obviously price just, we pushed up to all-time highs. Now, have some of the principles changed? No. I mean, you could say price actions change, but price action is always different for different reasons. But I mean, at least the way I analyze the market, the principles remain the same. And I mean, for example, this bullish absorption range, I was short, I was long, I was short, really, really bullish absorption, held along for an impulse. As so many people like to point out on Twitter, I shorted into 57.7K, took profits on my longs, and with the idea that if we break out of 57.7, we're probably going to all-time highs. So I got stopped out of my short, and then I just started taking longs. Did this on live stream, took longs. But anyways, the principles are the same. this is really volatile, choppy price action. This is that range I showed you where 200 million delta negative selling was absorbed. I took longs, targeting all-time highs. But I took profits at all-time highs. I shorted. And I'm playing within this volatility using the same principles. Longing, bullish absorption. Took profits up here. This was a weekend. Was looking for this liquidity to be grabbed for another long into all-time highs because of order flow. And so even though this price action looks very different than, say, this price action, or, you know, the fact that we've just been choppy grinding up, I would just say that you could say the price actions change, but not really. It's just doing what it's doing, but everything kind of is following the same principles that it has. So. No, I don't really have anything like that. So somebody, I'm not going to answer every question here, but somebody says, do you have any thoughts about the probability of a major low or high decreasing if it was made outside of traditional trading hours? Not really. Especially, like, there's just such a whole new dynamic with some of these big ETFs in the weekend. Like, I'm typically not even looking to take trades on the weekend, but I'm taking this long, and part of the thesis is that it is the weekend. So I'm kind of having to kind of rethink some of my thoughts about the weekend based on some of these new dynamic, and I'm basing some of this just off principles. Like, I don't have a ton of BlackRock data. I've been looking at it every day for maybe like 6 weeks. I have 6 weeks of data to analyze, and I think more or less it's all behaving how I would expect it to. But I kind of misread this price action in relation to order flow. But anyways, I mean, I think it's relevant, but I don't know. But I don't need to know. I mean, I just have clearly defined things that get me into trades, and I use risk management. I mean, you know, this trade sitting at 2.7R, ran up to 3.7R. There's plenty of traders who just, they trade 2R setups. That's all they're ever in. They're never in a setup that goes 8R, 9R, 10R, 12R, 15R. They risk $1 to make $2. For every dollar they risk, they make 2, and they have a 50% win rate. This is a great trade. I mean, there's nothing wrong with it. So, for me, there's certain information that, or certain data points I don't even really care about, because I just have so many tools and ways to get into clean, well-structured trades anywhere on the charts, that all I want to do is analyze the market and make reasonable decisions. I don't really care necessarily where price is, if it's the bottom, if it's the top. There's just so many ways to get into trades. So anyways, those are my thoughts. Hopefully this live stream was helpful. I just decided to do it because I remembered I said I would review the trade that I've fucked up and how I fucked that up. And that was quite annoying, and just give my thoughts on the charts locally, and hopefully you guys took something away from it. So oh yeah, local order flow, we can look at that. All right, so let's just review things really quickly. This is the 5-minute chart. The white and the blue is the candles, and the yellow orange is CBD. So on Bybit, as we came down into these lows, the 786, this little local sweep here, this, between this low and this low, is suggesting some bullish absorption. CBD making a lower low, price making a higher low, aggressive selling coming into these lows, expecting a breakdown. Price starts holding up. All right, that's kind of our first little local bullish signal. We start consolidating here. Kind of neutral CBD, frankly, in this region. Nothing bearish, nothing bullish, but we have some bullish ideas here. And then as we start breaking up here, we start to see some early evidence of bigger traders stepping in here. We have a big $5 million delta, $5 million market sell into this level. Price holds up. We have another 8. Actually, was this 5 and that was 8? Let me just pull up. Yeah, this was a $5 million market sell, $8.6 million market sell. Okay, so there's a big trader sitting here holding up this selling, and we can see that because CVD is now making lower lows in relation to this pivot. Okay, so there's some early evidence. More selling comes into the level, gets held up, and then we start impulsing off this level. We get a retest, and we get one more sign that these traders are here, which is the big sell-off into the retest of the trend line. Again, a bullish divergence here between price and CVD. Does not mean it's certain price will go up. It's just some evidence that there's traders stepping in. So what's happening here? Well, it's kind of neutral after that. It's bullish. It's bullish on this higher time frame pivot. It's bullish coming into this consolidation. This all still looks bullish to me. Doesn't say anything about where price would be likely to go from here. I don't personally necessarily like longing into this impulse. We either get continuation or we don't. But the reason is, like, let's just say there was like a massive sell-off here that got absorbed. That's a little bit more bullish locally again. But price could just come down back into these lows. It could do many other things and test that liquidity. Basically, positive delta, and we're just sort of grinding higher. Nothing. So no new actionable information here other than, for me, no reason to close. There's nothing bearish. There's nothing that says I should long this candle. I'm long from lower and I'll just hold it. Could you theoretically be longing into this because the bullish divergence is already present? Yes, but then I could just make the argument for why I should long every candle if after I've already longed once, right? Which I'm not going to do because I can't take on that kind of risk. You can only put on so much risk reasonably. And so I would just say, like, the last kind of clear bullish instance was what I was looking for a little earlier, which was the retest of the trend line, looking for the bullish divergence. That was that pivot I just pointed out. So far, so good. And impulsing off of that, right? So the other thing is, you don't always get something like, say, on the 5-minute time frame. There isn't always some new relevant data point that's super important on every candle. Sometimes it's just kind of like, I mean, not really a lot of volume, not really a lot of delta. My presumption would be that we're going to keep pushing higher because of the larger picture here, and this being the really clear signs of bullish. Oh, on the wrong chart. Yeah, few million delta, whatever I was saying, you remember. And this being the first really clear signs of these this selling getting absorbed for a push up. So, looking for longs and validation under there made sense to me. And I'm expecting probably higher, like we kind of zoom out a little bit, probably higher into some more liquidity, see some of this short squeezed out and some FOMO longs up higher. But that, of course, has nothing to do with what's likely to happen here. And even if that will happen, price could always just go lower. So I use risk management. All right. Well, thanks everyone for tuning in. Thanks for the thanks. Thanks for the questions. Hopefully, you all have a good weekend. I'm gonna